Are you curious about what's going on in our real estate market? Are you curious about how interest rates are impacting things and where they're at? Today, I have Molly Zimmerman from Bell Bank Mortgage here to talk to us about those things. I will get into the data in just a moment. I am Erica Carlson with Bricks Real Estate. I help people buy and sell real estate all over the Twin Cities, but I specialize in the Western Metro. If you learn anything new today, I'd love for you to join my growing channels, whether you find me on Instagram, my professional Facebook page, or YouTube. If at any point you have questions about what I'm talking about, or you want to set up a discovery call to talk about your particular situation, take a look at the link in the paragraph. That will bring you to kind of like my version of a link tree. In that very first link, you can choose an option and that'll set you up for my calendar. Of course, pick a time that's best for you. I think we'll start with data today, both the Twin Cities and Wright County at large, so you can make informed decisions. And then we'll have Molly in at the end. Okay, it's October 16th, and the data is, most of it doesn't change remarkably week from week, right? It's looking at these trends, looking at things that kind of pop out to us. And so we're going to jump over to the showings per week per listing. As I've said a million times before, my favorite set of data because it tells us who's shopping. Now, it doesn't mean who's actually going to pull the trigger and buy a house, but it certainly shows us if there is nobody shopping, what does that inform us in terms of making decisions as sellers? And what does inform us in terms of being a buyer, how competitive it is? There's always going to be outliers. So it's like no matter what our numbers say, there's always going to be some houses that go into multiple offers, or there's going to be competitive situations. So it's understanding the nuances of like what you're shopping in. As a very general rule of thumb, if you haven't heard me say this before, the lower the price point generally is going to be more competitive. So if you're in that starter house price range, you're not only competing against other people who are like you, first-time home buyers, possibly people who've just gotten married or just started a family, like people in those types of situations are going to compete at a pretty high level to get into their first house. They're also competing against people who are investors and are looking for fixer-upper houses. There's also there's this little niche of houses where they're gorgeous, they're cute, the condition's great, they're underpriced. And so that creates like a lot of demand. And so it's about understanding when you see that house for 300 and you've never seen a house look that sharp at 300, then it's probably not going to sell for 300. Like you have to kind of read the room. And it sucks, excuse my choice of words, but you go out, see 5-10 houses, and the best looking house is probably the one that's going into multiple offers because everybody is shopping in your pool the same houses. If you want to live in Coon Rapids at 300, you're shopping against every other person that also is open to that Coon Rapids area. And at any given time, there's going to be a handful of people that are going to meet that criteria, of course. So how do we look further? Other than going out and shopping and finding out for ourselves what it feels like, we can get an edge on it with the data I'm providing week to week. And of course, I focus on Wright County because I live in Wright County, but we'll also compare it to Twin Cities. So if you're new here, hopefully you'll find this helpful. So we only look at the 250 to 500K range because we're grabbing averages. We're kind of grabbing like the general pool. If you're above that, below that, the data is going to change slightly. What jumps out to me is that last week it was busier. The week before it was busier. So we are seeing a slowing of buyer activity in Wright County. It's not that what we're seeing is unusual. And I'm in this column right here if you're trying to follow along with my visuals. So we're at 1.9 this week, which is below 2 showings per week per listing. And I know there was another time where we were in the ones, but ones is pretty rare for us. So I'm just scrolling up here to show you. It was November 29th of last year, the last time we were at this number. Sorry, with that exception. And now it's November 8th. I can't speak. November 1st. But let's go to here we are. This is about where we were last time this year. Oh my gosh. I'm just going to start over. This is where we were at this time last year, October 18th. So look at that. Pretty much the same numbers. What's interesting about real estate data is that it can be very predictable. There's always going to be exceptions. And I've said this before. When COVID hit, it threw things, right? We didn't expect the feds to drop the interest rates so much, and it created that demand. I noticed when the war between Russia and Ukraine broke out, people slowed down, they got nervous. So there's going to be things that will change, but you can predict around holidays, you can predict around weather. And so it's fascinating to me that last year at this time, here we are at the same data. And look at this. It was busier the week before. It was busier the week before. Oh my goodness. Very predictable. So it was much busier. And then here, boom, we hit October 18th and it's slowing. Now it picks up a little the next week. Okay. So if you're selling a house, that tells us next week is going to be a tinge busier for showing activity, but now it slows down. It slows down, and then for some reason it picks up on November 15th. Okay, so because there's always going to be little ups and downs, the numbers don't stay the same. So 1.9 in Wright County is exactly what we would predict. It's normal for this time of year. It's incredibly slow. If you're selling a house, you are certainly going to feel only having 1 to 2 showings a week. If you're at 0, yeah, it should probably give you some pause and think about whether you really want to go into the November election/holiday season with your house on the market, or if it would be better for you to pull it and wait until after the holidays. Hennepin, on the other hand, we're at 3.4. They were a little faster last week, but they kind of up and down here in the threes the last couple weeks. They were in the fours before that. So again, we said it a million times, Hennepin will always be a little faster. So in terms of days on market, we're looking at now about 48 to sell a house in Wright, 26 on the median. So it depends on whether you think median knowledge is more interesting or averages. That's why I give you both. When we look at listing activity, the only thing that popped out as being interesting to me is we had 645 last week. We dropped to 640. So it sounded like somebody sold. It sounded like maybe somebody went independent, something like that. But then this is interesting. We were at 574 for no contingencies. And now we jump up to 576. So, I think the lack of contingencies number is more important than the first number because not that anybody really feels like they have 640 choices anyway. Those houses are not going to be in your budget, or they're not going to be in your area, etc. But it is interesting that the numbers contradict each other, that one went up and one went down. Pendings, have kind of gone up in the last couple of weeks, but that's nothing remarkable. Closings have significantly went down, especially over last week when we were at 192 and now we're at 178. So it just shows you that, typically a house takes about 30 days to sell from the time it goes under contract. Of course, there's always exceptions, and this does include new construction, so that definitely would throw our numbers a little bit. But yeah, what I mean by that, sorry, I'm kind of glossing over that. If you went under contract, let's say in April, and you're closing in October, yes, it's an October closing, but really you bought the house back in April. So it does kind of just throw us, but because the data is consistent, it doesn't matter. Okay, as you can see, this data is just 2 days old. We pull it from our brokerage every week. We have a sales meeting on Monday. And so what I really want to point out here, because I know you can read this to yourself, the big thing that jumps out is we want to look at that top, I believe it's a left graphic for you as well. And somebody actually heightened like the word extreme. When we hit 2.98 on here, and we have like a different metrics we use on brickstwincities.com if you want to check that out. And you can see the up and down. But anyway, the number has gone into the ones on there. And I know that's a little confusing, but when we hit that, we're now in an extreme buyer's market. So for weeks, I've been telling you that we have moved out of a seller's market for the most part. That little star has been on the buyer side. It was, towards the spring, the star was closer to sellers, and it's just kind of kept going down to the buyer's market. And so when we look at data as a whole, what's important for you to know is we really haven't seen a market like this in 5 years or so. So I hate to be the kind of person who says, this is a great time to buy, but not only is, we got the fall, the winter thing, interest rates are hovering in the sixes, right? You can maybe get it lower than that depending on, who you're working with. A lot of builder incentives if you're looking at new construction. inventory is up. I mean, these are just all these good things for home buyers. Of course, that's not what it feels like when you're trying to sell a house and it's not moving. But if you're looking for opportunities to find a house, it's hard for me not to tell you that this would be a great time to get out there and start looking because the competition is lower than, it will be in the spring. And and like I said, we just haven't seen a buyer's market like this in so many years that it's just a really standout moment for you. So, take some of that, if you know somebody who's been kind of on the fence, you might want to share that data with them so they can make an informed decision. My goal here isn't to be pushy or to like incentivize myself by telling you that. I'm just trying to give you hard facts. You can see at large the Twin Cities at 30 days, which is not, it's a little different than the Wright County because Wright County was, getting closer to 50. So again, houses sell a little bit faster if we look at the whole Twin Cities at large, inventory's up, which we know that's going to be true in Wright County as well. So as I shared at the beginning of the video, I have Molly Zimmerman back from Bell Bank Mortgage to talk to us, frankly, about interest rates and how they have changed or how people have perceived the change. And we've talked about, and we're always kind of vaguely talking about interest rates. But Molly, what can you share about what has happened since the Fed rate cut?
Well, first of all, Erica, thanks for having me again. Yeah, that's a great question to ask because I think the average consumer that we speak to, it's still very fresh in their minds that the Feds did cut the Fed fund rate on September 18th by 50 basis points. So many conversations I'm having with potential buyers, I would say many are somewhat shocked at where mortgage rates are currently sitting. So I guess to kind of explain what happened is the Fed rate cut was a huge reason why interest rates moved lower. So if we look back to like July, rates were really well above 7%. But we saw this like gradual decline in interest rates until the Feds did cut the rate on September 18th. And that was because investors in mortgage-backed securities, in the 10-year treasury, they anticipated this cut was going to happen. So you actually see mortgage rates change in advance of an actual rate cut. The day that the Feds cut the interest rate was kind of like the moment where investors kind of paused, because then it's like, well, let's see what happens after the Feds cut the Fed fund rate, which, if you remember, it's not tied directly to mortgage rate pricing. The Fed fund rate is more directly tied to like short-term lending, which would be like credit cards. What does the interest rate a bank is paying to borrow money on the short term that they then lend out to a consumer? So since that rate cut in September, we've actually seen a much stronger than predicted jobs report come in, which was not good for mortgage rate pricing. And we also saw the core inflation numbers come in higher than predicted that's a bit problematic because the Feds are really trying to get inflation down to like a 2% level. And that core inflation number came in at 0.3, which if you analyze that would take us to like a 3.6% inflation rate versus where we want to be closer to 2%. So we've actually seen interest rates spike, probably one of the largest spikes we've seen in the last 6 months since the Fed rate cut in mid-September. So in a nutshell.
Right. And so it's like, was there a cut? Does it, do people feel that? And I think it depends on when you've been shopping for a house, were you doing it before, afterwards? Maybe in your mind, if you kind of miss that moment, you're like, what's the change? I don't hear the change.
And I think keeping in mind, the Feds only meet 8 times a year. So the Fed fund rate only has the ability to change 8 times a year. And likely it's not going to, like, we don't typically see that, but mortgage rates are going to change based off of like the larger scale of what's happening, with the economy. Is inflation under control? I'm thinking, hurricanes, like natural disasters, are going to play a role in what might happen with mortgage rate pricing as well, and just the economy in general. So it's just a much bigger picture. It's just keeping in mind when you hear the Fed's cutting the prime rate or the Fed fund rate, it's not going to have a direct correlation to what mortgage rates are doing. Mortgage rates change way more often than the Fed fund rate will ever change. So just talk to your trusted loan officer and they'll be able to give you a good explanation on what's happening in the market.
I suppose that's what people hear on the news. So I suppose it's driving, that's where your understanding is what the media is putting out there. And so it seems like there's that direct connection. Of course, I'm only seeing, articles in my little world of, what you're sharing with me. And I think that this is important information for people to understand that, there's going to be that discrepancy. You made me like think of something because things have been so volatile the last couple of years where hour by hour, minute by minute rates are changing, which is hard to explain to people who are not in this field, like that it's not this static number. Is it still bouncing up and down as much as it was, I don't know, like a year or so ago?
I mean, right now I feel like we're seeing things are pretty sideways after we've seen the most recent spike. But I do think, as far as like the mortgage rates are concerned, I think we're going to see volatility moving out for the next couple months. That's my opinion. It's unpredictable. I have people ask me all the time, like, what do you think rates are going to do? And like, my best answer legitimately is they're going to go up, they're going to go down, or they're going to stay the same. I can't predict way too much that goes into it. So
Yeah.
um, it's true.
Well, you're right. And I think one of your previous videos, you reminded me of something really important, which is if you talk to one loan officer on Monday and then you wait till Friday to get a second quote, even 24 hours later, you might be having a very different conversation. And so you think you're doing this apples to apples intellectual, like I've done my due diligence, but it's just hard, like when I guess like maybe gas prices is like the only thing I can think of that like I would understand that has that like, drove by this morning the gas station by my house that it was this price and maybe it changed later, but you don't think of a lot of other goods and services that can have radical changes in such a short amount of time. And so it's really important to keep sort of a flexible mindset on the topic because of course you're going to start your journey, let's say now you're not going to close, well, we don't know how long it's going to take you to go shopping and find something, then you add the combination of how many days you request in terms of your closing date, so that could be 2-3 months away from the day you initially spoke to your loan officer. And yeah, you got to keep that flexible mindset, I think.
Absolutely. And I think I tell a lot of consumers it's you got to think of it as like if you're purchasing stock on the stock market, that's
Mhm.
how the mortgage-backed security market, the bonds move. It's ticking throughout the day essentially. So I mean, it's very it's not going to stay the same. It's static. It's all over the board. So we can see changes happen very quickly, but then we can also see periods of time where it stays pretty flat.
Right, right. And of course, yeah, it's until you talk to somebody about this, you don't understand how it's moving and changing. I think that there's like a little bit of a learning curve there. Well, I appreciate this information and hopefully somebody out there learns something and feels a little bit more confident about the topic. Of course, if they want to reach you, you're easy to reach because your name is your website. MollyZimmerman.com is the best way to track down her phone number. Of course, you can Google or whatnot. It's in my link as well. If you, I think the link says like get pre-approved or something like that, but we can easily connect you to Molly if you have any questions about anything with home loans and refinancing. Thank you so much for joining us, Molly.
Thank you.